Good evening, everybody. Happy Sunday. It is May the 22nd and a May 2-4 long weekend here in Canada, and a much-deserved one after an incredibly volatile week in the market. But what lays ahead? Let's get it started. I'm your wealth guy. Let's talk money. Let's talk Sunday market preview. All right, everybody. So welcome to the channel. I hope you like what I have to say tonight. If you do, please don't hesitate. Hit that subscribe, like, and share. But most importantly, comment. Love to hear what you have to say about the markets. But let's get started. Let's talk about last week's incredible volatility yet again. So last week, we were really hoping to see some positive days. 2, maybe 3 positive days. A little bit of a pullback. Oh, and we got a marvelous pullback last week. Incredible volatility, continued downside. But again, it seems like a lot of a repeat of the previous week, in a way. And what I mean by that is we saw lows get tested yet again and breached. By midday Friday, I had to actually walk away from the computers. I've got, for those that know, multiple monitors, multiple computers in front of me, or 2 laptops and a desktop. And sometimes you just need to walk away, because the main thing is you can't get emotional. And if you find yourself getting that way, then you do need to step away or understand, again, reviewing and understanding your design, your portfolio, and your strategy. But at midday, when I did walk away, so it was about 1:30 to 2 p.m., so a little bit later in the trading day, I had noticed the previous day that there are buyers, again, coming in at the low and picking up shares right across the board. And we definitely saw that Friday, because in the roughly 2 hours that I decided not to do any more trading, not to take a look at the markets, even though I did, we saw a 500 plus point swing, bringing the markets from deep red to green. Although marginally, still green, meaning support is still here at these lows. The market, traders, investors, institutions, the Fed, does not necessarily want the markets to really drop into bear territory. And we'll talk about that shortly as well. But buyers came in, picked up assets on the cheap, because even if it does go a little bit lower, here is a wonderful discount from the highs. And we saw that on both sides of the border, down south in the US and here in Canada as well. So again, we're seeing buyers coming in at these low levels, picking up shares, moving momentum upwards. Now, one thing we do have to keep note, and I keep talking about it every week, is we need to watch some very critical levels here. So the US 30 does need, or the S&P 500 does need to stay above 4,000, or at least very close to, and it's currently very close. It's sitting at around 3990, even though we'll talk about what's happening tonight in pre-market hours. One thing we definitely need to see is that level hold, or very close to it hold. If we drop to about 3850, I think the actual number is 3830, somewhere in there, we will officially enter bear territory for the S&P 500. And from there, we could very easily see another 10% drop. But again, we'll talk about that after, because for now, I really want to focus on where we're at today, where we're at right now, because that is critical, because like I said, we've seen support come in here. But let's have a look at what the markets are doing right now. Because if we take a look at indices right now, trading live futures, we've got the US 30 sitting at about 186 points in the green this evening. The US 500 up 30 points, sitting at 3932. Tech sitting at 104 right now. So very positive momentum. Hopefully this can carry forward. If it does, and we see a wonderful rally in the markets tomorrow, again, a very positive sign, much like we saw last week. hopefully this time it holds, because ideally what we'd like to see is 2, maybe 3 days of positive momentum pushing to the upside, sitting in the green, not sitting neutral, but then a little bit of a pullback that doesn't wipe out all the gains that we had seen over the previous few days, like we saw this week, where all the gains and then some were given away. So if we're able to hold these levels, see some positive momentum here this week, it could very well indicate, again, a second test of the bottom here and a move to the upside. What ends up happening is once we've seen the second test and a move to the upside, if it is a true bounce off the low, this is a very, very positive sign here. Now, we're talking very much from a technical perspective. If we breach and fall below, we can anticipate a big, slippery, fast slide lower because we'll breach a major key resistance. But let's have a look at other markets. So let's have a look at cryptocurrency, because cryptocurrency is showing much of the same strength to the upside right now. If we take a look at Bitcoin, Bitcoin is currently sitting at 30,362. Up over the last 24 hours, 3.25% almost percent. Over the last 7 days, only down about 2.5%. So it has been having and seeing some positive momentum. Ethereum, much of the same, sitting at 2043 right now. That's up 3.5% over the last 24 hours, seeing about a 4.75% negative over the last 7 days. And I know that sounds bad, but for those of you that know crypto, that is actually a very positive switch from the double-digit losses we had seen in the previous sessions. Now, looking at commodities today, live commodities trading, gold is currently up $2.60, silver up 8 cents this evening. Looking across the rest of commodities, pretty well holding, nothing really happening since most commodities are closed until tomorrow. However, energy is ticking slightly red, actually. Crude is currently down about 44 cents in futures trading here. Now, on the economic calendar, we do have a lot of housing and retail numbers, some manufacturing numbers this week. We do have the Fed minutes on Wednesday, which could impact the market depending on what is said in the minutes. But for the most part, I am expecting and hoping for a continued rally here tomorrow. But we won't know until the morning. Evening sessions are always a little bit deceiving. A lot of big institutional buying in the evenings and in the early sessions. However, as we approach the opening bell closer to 7 in the morning, that's when we start to see possible momentum shifts there. And it's usually pretty significant, reversing, if it does, everything we've seen in the positive for the night. Now, if we take a look at some of the key indicators, so again, 3850 is my number. If we do hit that number, it is very important that we have to start assessing where we want our savings to go, because it could be a very quick slide down to the downside, another 10%. In my opinion, if that does happen and we do breach and we do close below that number, for those of you that are in retirement savings or retirement income plans, it's probably a safe time to start reassessing the portfolio and perhaps take a significant portion into a cash position. And again, each portfolio is designed slightly different, but that is something that you should take a look at and consider at that point. Nothing wrong with jumping out and buying back in if it dips down as much as even 5-10%, and then on the way up, waiting for confirmation of a positive momentum before you repurchase. And there are levels to indicate that, but that is something we'll leave for another day because I don't like to pick bottoms. But this week can have a very positive momentum switch. If it does switch to the upside, it will be fast and it will be aggressive. That doesn't mean that this week we're going to see it or that it's going to explode to the upside and go parabolic, but it very well could in the coming weeks. Now, when it comes to other markets, I am still very much bullish on commodities. Commodities have had a very, very strong couple of sessions here. But most importantly, we need to watch the 10-year yield. I say it week in and week out, watch the 10-year yield. Right now, the 10-year yield is sitting at 2.77 or 2.788. We really need to see the 10-year yield push over 3. If we can get it above 3, that is additional good news and support for the market, indicating that we are receiving that positive continuation to the upside. So again, watch the 10-year yield. US dollar needs to slide a little bit here. Positive momentum needs to continue for at least 2 days. and then a possible slight pullback, not erasing everything that we've seen. This is pretty well going to look very much like a copycat of the last 2 weeks. Let's see what happens. That's it for today. I will see you all tomorrow morning at the opening bell with a little bit more detail on what's to happen tomorrow.